Well, friends, good morning. Jagendra Rana here. So, I'll take up today industrial all risk insurance policy. Industrial all risk insurance. So, basically, this policy is for big commercial institutions. Normally, the fire policy cover the material risk. These fire policies are covering the risk according to the sum insured. So, for example, up to 5 crore Bharat Sukshma Udyam Suraksha policy is there. Over 5 to 50 crore Bharat Laghu Udyam Suraksha policy is there. And over 50 crores standard fire and special peril policy is there. But they are all individual or exclusive fire insurance policies. If a customer requires the compact policy or a package policy which includes many other sections also, in that case, the option available is industrial all risk. So the eligibility criteria for industrial all risk policy is all risk other than petrochemical risk having over all sum insured of rupees 50 crore and above in one or more locations in India are eligible to take this policy. Means for a sum insured below 50 crore, this policy cannot be taken. So what does the sections covered under this policy? Because this industrial all risk policy consists of Section 1 as material damage, Section 2 business interruption. This Section 1, that is material damage section, includes standard fire and special peril policy plus add-on covers, then burglary and machinery breakdown, that is MBD policy, boiler pressure plant, that is BPP policy, electronic equipment insurance, that is EI policy. So they are all clubbed together under the material damage section, which is a combination of lot many policies like standard fire and special peril policy, burglary policy, machinery breakdown policy, boiler and pressure plant insurance policy, electronic equipment insurance policy. They are all part of Section 1, that is material damage. Then Section 2, that is business interruption. Now, business interruption section includes fire loss of profit insurance and machinery loss of profit insurance. You may be aware when we talk of business interruption, that means loss of profit insurance and consequential loss of insurance. So these are the options available. Sorry for interruption. So these are the two sections available. Section 1 material damage and Section 2 business interruption. Section 1 is a combination of 5 policies, that is fire insurance, burglary insurance, MBD insurance, boiler and pressure plant insurance, and electronic equipment insurance. Section 2 provides loss of profit policy or consequential loss insurance policy or the business interruption policies. There are two categorized, fire loss of profit and machinery loss of profit. So as far as rating of this policy is concerned, this is section wise. Means section wise material damage, that is standard fire and special perils plus add-on covers as per the All India fire tariff. But now since the de-tariffing there is there, or de-notification of fire tariffs are there, the rates can be applied by the companies as per their choices, because market is price free. Similarly, the burglary, no additional rates needs to be charged. But for machinery breakdown, business boiler pressure plant and electronic equipment, normally 2.50% to be charged on sum insured. And similarly for FLOP and MLOP, the rates are decided by the insurance company according to the cover required by the proposers. Then the policy, industrial knowledge policy, is at par with policies available in the international market. All risk policy and not a named peril policy. This is standard clauses like escalation clause, removal of debris, omission to insure additions, alterations are available on a specific requests. Policy has no warranties. No depreciation is deducted for machinery breakdown, boiler pressure and pressure plant, electronic equipment insurance. Total loss or partial loss claims are entertained. Under insurance to the extent of 15% is waived under section 1st, that is material damage section. That means even if the sum insured is 85%, nothing will be deducted out of the claim amount, and up to 15% under insurance will be waived. Burglary covers are inbuilt without any additional premium. Transit risk within the compound are included without an additional premium. Transit risk, this is important, because transit risk is part of the coverage and within the compound are included without an additional premium. But transit out of the compound is a subject matter of marine transit insurance. So fire loss of profit is built in compulsory, means FLOP part is inbuilt cover, but MLOP, that is machinery loss of profit, is optional. That means section 2 provides FLOP and MLOP, but FLOP is inbuilt coverage and MLOP is optional coverage. If the proposer want to opt for MLOP also, in that case an additional premium has to be paid. Then additional covers under FLOP are inbuilt covers without any additional premium except covers mentioned in the policy. Means additional covers under FLOP are inbuilt covers without any additional premium. So FOUS, that is failure of utility services, suppliers and customers premises, may be covered at an additional premium under FLOP business interruption section. These are the additional coverages provided along with the FLOP policy without any additional premium, but insured has to opt for them. Say for example, failure of utility services, suppliers and customers premises may be covered at an additional premium under FLOP. So the policy is basically meant for big commercial institutions where the sum insured is more than 50 crores, Normally, corporates prefer this policy because this is a compact one. This is not the exclusive fire policy. This has a combination of lot many policies. And under one section only, one policy only, without any additional paperwork, the many risks can be covered. So industrial all risk policy is one popular policy required by the business enterprises, because not only the loss of profit coverage of the business is covered, but loss of profit coverage because of machineries is also available under the coverage, but that is optional. If the insured required, it can be availed on payment of additional premium. This is a policy which has no warranties and no depreciation is deducted for machinery breakdown, boiler pressure plant, and electronic equipment insurance. And under insurance is also waived up to 15% for any loss, because the sum insured, which may be 85% of the current replacement value, shall be treated as full because of this provision of waiver of under insurance up to 15%. And the FLOP cover is inbuilt, which is already part of the policy. No option has to be exercised by the insured. So policy is most useful and meant for big enterprises who are having more than some insured of 50 crores. Thank you very much.